For next couple of minutes, I will talk about the expectations of the financial service sector from the budget. If the sector can be divided broadly into two categories, one is the lending institution and other is the capital market and the related intermediaries. Coming to the first category, the biggest issue that the sector has faced is the accumulation of bad loans or the NPAs over last 8 to 10 years. While the ratio of NPAs has largely improved in last couple of years due to measures taken by RBI, there are certain issues that need to be sorted out from the taxation point of view. Some of the measures that RBI and the government has taken has resulted in a huge flow of foreign investment into the asset reconstruction companies, and therefore it's important that the taxation of the foreign investors is clarified. Currently, the income that is earned on the security receipts held by the foreign investors in the ARC trust is not very clear. There is no clarity as to whether such income should be treated as business income or capital gain, and therefore the tax level of tax varies significantly depending on the fact whether the foreign investor is from a country with which India has a treaty or not. And the other issue is that the NBFCs have been expecting parity with the banks. Currently, there is no parity so far as the taxation of interest on NPAs is concerned. NBFCs have to accrue interest in their books of accounts because of accounting standards, and therefore as per law they have to pay the tax on accrued income, despite the fact that there is no certainty on actual realization of interest. So therefore, like banks, there should be clarity that NBFCs will also pay tax on interest on NPAs only on actual realization. Coming to the other category of institutions, which is mainly the asset managers and the institutional investors in the capital markets, the mutual fund industry expects that the dividend should be taxed in the same manner as if the investors were investing directly. So currently, in respect of direct investment by investors in the shares of companies, the surcharge on the dividend is capped at 15%. Whereas in case of mutual fund, the dividend income from mutual fund gets taxed at the highest rate of 37% surcharge based on the income level of the investor. So therefore, this expectation of the mutual fund industry is primarily to bring it at par with the direct investment. Next point is about the AIF industry. The industry has been expecting that category 3 should also be treated as pass-through vehicle. Currently, if it is not pass-through, the income which is other than capital gain and dividend, which is primarily the income from F&O, gets taxed at the highest surcharge rate of 37%. So therefore, industry has been expecting that there should be some kind of a cap, so that the investors ultimately get taxed at a lower rate, which otherwise they would pay based on their level of income. And finally, one notices that the investment in the stock market, the income from the investment in stock market gets bucketed in 3 buckets. One is the equity on delivery basis, then the equity on non-delivery basis, and the third is the F&O. Each of these income get taxed at in a different manner. For example, income from speculative transaction, the loss cannot be set off against other income. Similarly, in case of loss from F&O can be set off against other income in the same year, but if it gets carried forward, then it cannot be set off against any other income. Therefore, it's high time that these concepts or restrictions of set off of losses are removed now.